Coinbase Premium turns positive, SOPR recovers as institutions take over, Bitcoin is set to hit 80,000. Mobile trainable large model Tether schaffen, Polymarket hits the red line, prediction markets face strict regulation. Wednesday, March 18th, BitcoinTV Chinese channel, B-Link is here, I'm Dong Dong. First, let's look at the most important data headlines in the crypto world over the last 24 hours. Now, a very key signal has started to change. On-chain data shows that the Coinbase Premium has turned positive. Simply put, it means the US side has started buying actively. Looking at the chart, for a long time before, the premium was mostly in the negative range, once hitting nearly negative 180, which shows there was continuous selling pressure and a lack of demand back then. But recently, it's returned to positive values, fluctuating roughly between +1 and +20. While it's not extremely strong, it's clearly shifted from being seller-dominated to buyers starting to take over. More importantly, during this process, the Bitcoin price rebounded from a low of about $65,000 to around $74,000, showing that this rally is backed by real capital support, not just a hollow pump. The logic behind it is also very clear. On one hand, ETFs are continuously pouring money in, and on the other, rising regulatory expectations like the Clarity Act are making institutions more confident to enter the market. This current rally isn't just driven by futures, it's spot buying, with US capital pushing up the price. Next, we just need to see one thing, whether this premium can stay in the positive range consistently. If it can stay steady above zero, or even go higher, it shows this isn't a fake move, but institutions gradually building their positions. This wave has actually already shaken out some people. The short-term holder SOPR previously dropped to 0.95, meaning short-term players collectively couldn't hold on and exited at a loss. Now it's back above 1.0, showing a recovery from a loss-making state to basically breaking even or even making a slight profit. The selling pressure that needed to be released has been absorbed. Although it wasn't as severe as the drop to 0.9 in August 2024, multiple tests have pretty much cleared out the weak hands. Short-term holdings are clearly cleaner, and supply is tightening. Simply put, it's not that no one is selling, but that those who were going to sell have already done so, and those remaining are more resilient. Once this structure stabilizes, the market will likely correct upward, slowly rising toward the $80,000 to $90,000 range. The pace won't be explosive, but it will be very steady. To put it bluntly, this market trend is one thing. It's not retail investors driving it, but institutions taking over. Bitcoin staying steady above $74,000 is backed by ETFs still pouring money in, with about $199 million in inflows. At the same time, coins are being moved out of exchanges, with over 18,000 BTC flowing out. Large capital clearly intends to hold for the long term. More importantly, there hasn't been much leverage added on the futures side, with open interest at only $22.7 billion. This shows that this wave isn't driven by gambling, but by actual buying. Plus, with the premium persisting, US capital is still actively buying. Simply put, it's not a question of whether it will rise, but that the holdings have shifted to more patient hands. The market is slowly building up for the next wave. Please like and hit the bell icon. We'll be monitoring the news for you 24 hours a day. This channel takes a macro perspective, providing a 15-minute deep dive to help you quickly grasp major changes in digital assets and boost your knowledge. Now let's take a look at today's news stories. Individually, each one is a bombshell, but when viewed together, they all point to one thing: the times have changed. Let's break it down. What is AI doing? It's working hard to slash all kinds of production costs. What about stablecoins? They're quietly rewriting the path money takes from one place to another. Even traditional giants like MasterCard are getting in on the action. So, what are they competing for? It's control over the settlement layer, the core of future transactions. This isn't just simple innovation, it's a battle for the next generation financial gateway. Once that gateway is locked in, the subsequent traffic and profits will follow suit. Tether's QAAC launched the cross-platform BNet LoRa framework. Based on Microsoft's 1-bit LLM architecture, it supports local fine-tuning of billion-parameter models on Galaxy S25 and iPhone 16, significantly lowering the bar for computing power and memory, and is now open-sourced on Hugging Face. Meanwhile, they led a $50 million investment in 8 Sleep, valuing it at $1.5 billion. By targeting AI sleep and medical scenarios, they're pushing a local-first AI strategy where computing power is on the phone, data stays on the device, and no cloud is needed.
Then, of course, we have the more recent new technology type of investments, such as artificial intelligence or biotech. I love them because I'm a nerd at my core. So, we decided to invest in Northern Data, which is a company we believe in.
PayPal is expanding PYUSD to about 70 markets covering Latin America, Africa, and Asia, and supporting cross-border payments. At the same time, MasterCard plans to acquire BVNK for up to $1.8 billion, doubling down on its stablecoin settlement strategy. As regulations become clearer, Visa and MasterCard are accelerating their entry, pushing stablecoins from mere trading tools toward becoming global payment infrastructure. Putting these three things in the same framework reveals a clearer structure. AI solves efficiency, stablecoins solve liquidity, and payment giants control the gateway. Once these three are linked, the business model will be rewritten. In the future, it won't be about whose technology is ahead, but about who becomes part of the system. The real competition isn't on-chain, it's off-chain. Who can embed crypto into the scenarios users encounter every day? If you ask me, this round isn't about a bull market, it's about who can become the new financial system. Regarding this news, you might think the focus is on Polymarket being banned, but what's really worth considering is that the new concept of prediction markets is hitting regulatory red lines. In the past, people might have seen prediction markets as a guessing game, guessing who wins an election or a game. Essentially, it was like buying a lottery ticket, a trade of information and probability. But from a regulatory perspective, it's gradually moving toward the characteristics of financial derivatives. Once real data, policy outcomes, or macro indicators are involved, it's easy to run into issues with insider information and market manipulation. Argentina's move this time, to put it bluntly, isn't just about targeting one website, but about defining the nature of the entire prediction market sector. Are you ultimately a market tool or a high-risk financial product? Once that definition is set, the pace of subsequent regulation will clearly accelerate.
An Argentine court has blocked Polymarket and requested Google and Apple to remove the app, deeming it an unlicensed prediction trading platform that lacks identity verification. The trigger was inflation data trading. About 20 minutes before the release, funds bet on a 2.9% increase, with trades totaling about $91,000, sparking insider trading suspicions. Abnormal position increases across multiple accounts also drew regulatory attention.
It's the most accurate thing we have as mankind right now until someone else creates some sort of a super crystal ball.
Data shows that Polymarket's open interest has exceeded $1 billion, having been one of the fastest growing on-chain sectors. Trading volume significantly expanded during macro events. Meanwhile, it faces restrictions in places like France, Italy, and Germany as regulatory controversy grows. Coupled with AI and automated trading, price discovery is enhanced, but it also amplifies risks of insider trading and manipulation.
If you look at these two things together, you'll see a more critical shift. Prediction markets are moving from niche innovation to a systemic variable. Once it truly possesses price discovery capabilities, it's no longer just a tool, but something that will influence real-world decision-making. And that's where the problem lies. When the market starts predicting in advance or even reflecting real data, the boundary between it and traditional financial markets disappears. So what this sector faces next isn't a growth issue, but a survival issue. Can you actually continue to exist within a regulatory framework? Vietnam is locking liquidity, South Korea is watching exchanges, Asian crypto regulation is reclaiming power. Rakuten AI debuts, open sourcing, flattening technology. AI victory depends on the speed of implementation. In the past, the crypto market had a characteristic. Trading flowed globally, but regulation was local, creating a massive arbitrage space in between. What you see countries like Vietnam and South Korea doing now is essentially pulling that liquidity back to their home turf. Why start moving now? Because the scale of crypto is now large enough to affect capital flows and the stability of the monetary system. The path forward will be very clear. Allow development, but it must be within a controllable range. This isn't a crackdown, it's a reclamation of authority. Whoever can keep trades, funds, and users within their country will hold the financial initiative in the next phase.
Vietnam is pushing for an upgrade in crypto regulation, intending to restrict users from using offshore exchanges and promoting the launch of local licensed platforms. Licenses are restricted to local companies with a minimum capital of about $400 million and foreign ownership not exceeding 49%. As the world's fourth largest crypto market with annual trades exceeding $200 billion, it has long relied on platforms like Binance and HKEX. The core of the new regulations lies in controlling capital outflow and strengthening local oversight.
Closely with the regulator to establish more frameworks for this industry and keeping this industry safe.
South Korea is tightening oversight, setting up regulatory mechanisms with 9 payment firms to track funds and payments, while strengthening real name trading and anti-money laundering rules, raising the bar for exchange compliance. With Japan and Vietnam also pushing localized systems, Asian regulation is expanding from trading to the entire payment and fund lifecycle.
If you look at all these changes together, you'll see a major turning point. The market structure is shifting from global unified liquidity toward regionalized layers. Now, this means capital efficiency might decrease, but certainty is actually on the rise. For long-term capital, this is a positive, as rules become clearer and risks more manageable. But for short-term traders, the room for maneuver will shrink, and the logic driving volatility will also change. The future market won't be about price competition anymore, but competition between regulatory frameworks. Which system you're in will determine which markets you can access. Japan's Rakuten launched Rakuten AI 3. Essentially, it's not just about Japan building a model, but global AI shifting from technical competition to efficiency competition. Over the past 2 years, the US and China have been competing over whose model is stronger and whose computing power is greater. But since DeepSeek arrived, things have changed, model capabilities are leveling out, and cost has become the key variable. Japan's choice now is very clever. Instead of taking on OpenAI head-on, they're using open-source models for local optimization and rapid deployment. You'll see AI starting to resemble the early internet, where core technology is held by a few, but application opportunities are distributed globally. This means that in the future, success won't be determined by how strong you are, but by how fast you can apply it.
Rakuten released Rakuten AI 3 with about 700 billion parameters, using an MLE architecture and supported by Japan's GENIAC computing power, with a focus on optimizing Japanese and enterprise scenarios. Industry experts generally believe it's fine-tuned from an open-source system, significantly cutting costs and development cycles. Meanwhile, Japan is boosting local computing power, and Europe is pushing for an open-source AI alliance to reduce reliance on the US. Overall, AI is shifting from a closed-source monopoly toward open-source diffusion.
Such as OpenAI, we announced the big deal with some. At the same time, we are working on our own large language model as well. We would like to improve our marketing efficiency by 20%, and we would like to empower especially small and medium-sized enterprise by AI by 20%. So that's going to give us huge profit of growth.
DeepSeek V3 achieves near-top performance with low computing power, driving the rapid adoption of open-source models. NVIDIA launched Nemo Cloud at GTC 2026, pushing AI from a tool toward an execution system. OpenAI, meanwhile, continues to reinforce its closed-source model, raising the barrier for its services. A divergence in paths has formed. The US is closed-source, China is open-source, and Japan and Europe are localized. The focus of competition is shifting from model capability to application speed and implementation capacity.
When it comes to the crypto market, I have a very clear judgment. AI is moving from just telling stories to directly participating in trading. As model costs drop and open source capabilities spread, AI is no longer just a tool, but a new player that can enter the chain on a large scale to execute strategies, take action, and even participate in governance. What you're seeing isn't just a Japanese model, it's a trend. AI is becoming a part of capital. The core variable of future market conditions will no longer be just human emotion, but the continuous behavior of machines. To put it simply, the market hasn't slowed down, it's just gotten smarter. On-chain data shows that miner wallets have seen a net inflow of over 3,200 BTC in the past 7 days, the highest level in nearly 2 months. Some miners are choosing to stop selling and start hoarding, which the market interprets as a bullish signal for the future. The comment section sums it up in one sentence. Even the miners aren't selling anymore, yet you're still hesitating. Solana's on-chain transaction volume exceeded 45 million in a single day, with over 40% coming from bot addresses and active addresses hitting a new high. But users are complaining. Is it actually busy? Or are the bots just entertaining themselves? Latest data shows that Bitcoin spot ETFs had a single-day net inflow of about $120 million, marking 3 consecutive days of net inflows. The market hasn't risen much, but capital is slowly flowing in. Netizens joke that this isn't a pump, it's a quiet accumulation. One address added about 5,800 ETH after it pulled back to a low point at a cost of about $3,200. The floating profit now exceeds $1.2 million. The comment section is unanimous. They're buying the dip, and we're just copying their homework. AI sector tokens like FET, HKEX, and WLD saw a general rise of 5 to 15% in 24 hours. Trading volume increased simultaneously, and market sentiment has clearly warmed up. But veteran players threw cold water on it, saying every rise is just the start of another story. In the past, the workplace was about who you were. If you were a programmer, you wrote code. If you were a designer, you did design. Everyone stayed within their own boundaries and slowly climbed the ladder. But with the emergence of AI agents, these rules are being rewritten. Now, the truly valuable people aren't those who are just great at one thing, but those who can combine different skills to quickly complete an entire project. You might not know how to code, but you can use AI to generate it. You might not understand design, but you can use tools to produce results. The workplace is shifting from job roles to being result-oriented. It's no longer about who's more professional, but who's better at integrating resources and utilizing tools. Future competition won't be about a single skill, but about whether you can piece together a set of capabilities into a complete solution. Future roles won't just be job titles, but a combination of abilities. Alright, that's the main content for today's episode. Our channel is always focused on the core narratives and value discovery within the digital asset space. If you agree with our logic, feel free to stay updated with the latest news and turn on notifications. To access a higher dimensional research report space, follow our advanced channel. Monday through Friday, we share in-depth reviews of market cycles to capture certain opportunities within trends. See you tomorrow!